everyone, thank you for tuning in to another episode of tonight's market commentary. My name is Kay Kim with the Traders Club, 2tradersclub.com. Again, thank you for tuning in, guys. I know I haven't been tweeting or producing any articles or videos. I've been away out of town on vacation for about a few weeks here. I'm back. So I wanted to do this video for you guys, and I wanted to start with the Dow Jones Industrial Average. And I think, I think the Dow Jones Industrial Average is showing relative strength compared to other major indices that we watch, like S&P 500, Nasdaq, Russell, New York Stock Exchange, semiconductor, and transport, right? And I think I want to kind of, present to you today that why I think Dow Jones Industrial Average might be the key index that you want to follow next, maybe even remainder of this year, to see if the market has what it takes to possibly come out of this mess, right? We have so much speculations. There's so many people calling all kinds of shenanigans, yet the market has been pretty resilient. Market has very, very strong bounce here back in early 2016 of this year, January, February, right? And so you can see that we had a double bottom there. The neckline was cleared, and we confirmed it. And after that, we just gone back up here. I think the most important part about this move is not only that we had a very strong move to the upside, but we have cleared above this downtrend resistance. Again, Dow Jones Industrial Average is the only index out of all the other indices have cleared above this resistance. And you might be saying, well, okay, wait a minute, but yeah, we cleared it, but what does that matter? Because we came right back down. You're right, it came back down, but it matters. It matters in technical analysis, because if you don't understand it, you do not understand technical analysis, right? What is the definition of a downtrend? Lower highs and lower lows. What have we cultivated when we have gone above this level? This is very subtle, but we have a higher high. Can you say that this high is definitely higher than this high? Yes, it is. So when you say that we're in a downtrend, you're actually going against this theory, right? You're going against historical theory, actually, of lower, and we could even say technical law, right? It's a technical law that as long as it cultivates lower lows and lower highs, we're on a downtrend. But we have cultivated a higher high. How can we say that we're in a bearish downtrend? We're not. If anything, we're in a sideways market. That's what I've been trying to tell you guys for this whole year long. Anyway, so many people are saying that today's market looks a lot like 2008 crash. It does not. Dow Jones Industrial Average definitely telling us the sentiment is completely different. Let me just demonstrate to you guys just real quick. We're back here 2007, 2008. You guys all remember this. We crashed here very fast. But before we crash, what can we study on this chart patterns here, right? What we have is this. Basically, we have a left shoulder, head, right shoulder, classic head and shoulder formations, right? This is the neckline here and here. First of all, what is the definition of a downtrend? Lower highs and lower lows. First of all, can you tell me, do we have any kind of higher highs at this point? Just looking at this here. Because we stopped cultivating higher highs here. This high is definitely lower than this high, right? So this was higher highs. And what is the definition of downtrend? Lower highs and lower lows. And if we just go back and just kind of draw this here, the downtrend resistance, you see that downslope, how steep that is, right? You can see that the 200 SMA coming down very fast. And we can see, even though we try to bounce in this vicinity, we fell short here and made another lower high. Do you see this? Lower highs and lower lows. That's the definition of a downtrend. Again, look at the slope of this thing. Look at the angle of that thing. Look at the 100 and 200 SMA cross. And there's a lot to study. Go back these charts and study these charts, historical patterns. Doesn't mean just because it happened in the past does not mean it's going to happen in the future. It just means that, you know, if we understand the past historical sentiment, then we can also understand possible probability of today, right? Doesn't mean that it's going to happen exactly the same, even if we have exact same, you know, sentiment. But the key thing about today's move is that we do not have any sentiment that is similar to 2008. We're in a very, very different sentiment. So look at this. I want you to understand this. We're in 2008 here. Lower lows, lower highs. Very steep slope here. Down slope there. 200 SMA coming down. Hit that. This thing tank. We continue to cultivate lows, and lower highs. 200 SMA, 100 SMA. They're in a waterfall stage, right? And that'll happen after that 100 SMA, 200 SMA has that, you know, the dead cross. That's what we call dead cross, right? Let's go back today, because that's everybody's trying to tell me that we are having a similar sentiment. Do you understand now why this is very, very important? Do you understand now? Because if we're gonna see a downtrend, right? We're gonna see something like this: goes up, comes down in this perspective. That's what we call downtrend. So now do you understand that when we clear this downtrend resistance, even though we came back down, we may come back down a little bit more, but that cultivation was very, very important. If I go back to study every single corrections and every single historical crash, you will not see any chart pattern cultivating a higher high. Again, I do not want to call it yet that we came out of this mess, where we have come out of this mess, and Dow Jones Industrial Average is getting ready for, you know, huge bullish run from this point on, because I think there's still going to be a lot of volatility. And again, also we still need S&P 500. And there's a lot of data that we need to clear. Also that, you know, New York Stock Exchange is still kind of weak. Russell 2000 is weak. Transport's been showing a lot of weakness. So there's still a lot of warning signals out there. I'm not denying that. I'm not refuting that, or neglecting it. What I'm simply saying is this: Dow Jones Industrial Average has been showing some relative strength, so I would recommend you to take heed of this in this index and see where we're going. So, you know, looking at the big picture, obviously, you know, if anything, we're not in a downtrend. How many times I have to say this? We're not in a downtrend. We are in a downtrend, a minor term, but looking at a major primary term perspective, we're not in a downtrend. If anything, we're still in a primary term uptrend. Do you guys understand what I'm saying? If anything, we're still in this sideways market. A lot of times a sideways movement is not, it actually favors the buyers. That's what we call the market is resting before moving higher. It's a resting pattern market, because the market had already made its move, right? It had like 6 years of bullish run, right, from 2009 to about 2015. So, you know, to rest for about a year or 2 years, that's definitely a normal thing if you go back and study the historical patterns, historical price action. But anyway, so looking at more of a minor term perspective, obviously in the minor term, we're just zooming in here, we do have lower highs and lower lows now. So right, so I can conclude that we are in a bearish trend in the minor term, which means benefit of Dow continues to go to the sellers in the minor term. However, again, intermediate to primary term, we're still more of about, you know, neutral to sideways movement, right? Intermediate term, actually, we're in a bullish sentiment, right? Because we still in this mode, we are coming down after this kind of bullish move. We're pulling back. So the question then becomes, are we pulling back to create a higher low before getting back up, right? Creating that higher low. Or are we falling back to continue on with this channel type of action? If you're going to continue on with this channel type of action, there's a good chance it can come back down to this level, right? Again, there's still a lot of level that it needs to clear. If you want to see if it continues to come down lower, you want to put your Fibonacci here like this, and this is what I call Fibonacci retracement zone, right? as long as we stay in this level, right, and bounce at any of this level, it can be considered as intermediate term higher low. What does that mean, intermediate term higher low? It means we might be inaugurating bullish uptrend for the first time. That means we need to first cultivate higher low, and then it needs to cultivate higher high. Once we see that higher high, higher low, we could say that we're now getting back up to an uptrend from this sideways movement. But again, we do not have the data of that yet. So we'll talk about it when it comes to that time. You know, we will cross that bridge when it comes to it. But for now, we're dealing with this downtrend resistance on the Dow Jones, right? So we got resistance, right? Resistance here. And we've been acting as kind of a support level in this vicinity. We did throw a high wave spinning top candle. What is high wave spinning top candle? It's kind of indecision, right? We're just kind of, you know, bull and bear, kind of tug of war. Nobody won. We're just kind of hanging out there. It could be, this is kind of like, I'll call it more like a wild card. If we see continuation to the downside, I'll look at that candle as a continuation or rest pattern. But let's say if we see a gap up tomorrow, and if we see a bullish move like this next few days, I'll look at this, you know, high wave spinning top as a morning star reversal or doji star reversal. You guys heard that before, right? And obviously for this, you know, downtrend sentiment of minor term, for it to change, you want to first see the price action clearing above that downtrend resistance, reclaiming some of these moving averages that is coming down here. You know, we do have let's go to 65-minute chart. We do have concerning signal in the minor term. We did cultivate. You can see that this is what we call a head and shoulders pattern. Again, this is 65-minute charts now, not a daily chart, which means every single candle represents 65 minutes or hourly, right? Hour, right? So you can see that we got a high, we got the you know, left shoulder there, and we got a head, right? And we got a shoulder, okay? And this is what we call neckline, right? Okay, this is a neckline, a support, a vicinity. Okay, so for this to confirm, for this head and shoulder to confirm, you want to see price action getting below 17,400. A lot of times what you want to watch out for is that it could come down, you know, and then printed something here and traps everybody, and then it could go right back up and then throw an invert head and shoulder. So be careful with that if you want to short at this level. But upon full confirmation on this head and shoulder pattern, you could kind of probably do a little measurement, maybe coming back down to about 16,800 level, which is coinciding with 50% of retracement zone of Fibonacci on the daily chart. Do you see what I'm saying? So we're just right at this level here. We just threw that high wave spinning top, which is a wild card. So it will be important how it closes next few days or even, you know, early next week. If we get back above 1020 MA here, I think there's a good chance we'll get back up to 17,932, and this will become a morning star or doji star reversal to the upside. If we continue lower, and for the fact that we're just right on that resistance level, right? That downtrend resistance possibly now becoming support. Again, only we need confirmation. We need substantiation that this is truly a support. We do not know that yet until we see a price action moving to the upside. If we lose this to the downside, I think there's a good chance that next level support is 17,126, and then after that would be 16,806, right? This will be the first level of support that you would want to watch, and then a 50% retracement, which is a 16,806, right? And this is the same level that coinciding with the 100, 200 SMA. It's interesting. Again, remember when we compared it with the 2008 price action after the death cross, what happened? We saw a waterfall. Do you remember that in 2008? Well, right now we're not seeing a waterfall. We're seeing a sideways move. What does that mean? We're dealing with sideways market in a primary term. That's what these moving averages are conveying. This is how you look at the moving averages. There's so many people do not understand how to look at these technical tools, and they just make up all kinds of shenanigans. It's just so stupid. So that's how you do it. You want to look at a sentiment. If you don't understand what the sentiment we're dealing with, go back and kind of look at the chart and study the chart. Look at your moving averages, and you gotta look at everything. You can't just look at one data and then conclude that this is what's gonna happen. That's not gonna work. You have to look at every single data what's out there, and then you have to come up with your assessment and analyze the market and with the probability of direction, because nobody truly know exactly or 100%. Nobody can guarantee it because we're not God. We don't have a crystal ball. Again, I just want to do more of a kind of a short term, minor term analysis and what's going on right now. I've done a big picture analysis on the Dow Jones Industrial Average. If you go on my YouTube or my blog, prepare for a new secular bull market cycle, and so you can check that out if you want to look at a big picture analysis that I've done. And I think that's about it. Maybe tomorrow night I'll do an analysis on the Apple and Tesla and Boston Scientific. And I think those, possibly Apple and Tesla, there might be a good chance that, we could see some buyers here. So tomorrow night I'll do that. I don't know about tomorrow. I mean, it might be tomorrow or it might be weekend. It's just depending on what my schedule look like. But the next couple of days, I promise I'll do that. But that's my analysis on the Dow Jones Industrial Average. And I'm going to continue to watch this. And again, this is a level. It's a very, very important level that we're standing right now. And with that, high wave spinning top, it just kind of really up to what's going to happen in the next couple of days. We do have a 10-20 MA falling, which means that we're in the bear sentiment in the minor term. But again, in the intermediate term though, we're still in the bullish sentiment. Keep that in mind. You got to understand the different sentiment: minor term sentiment, intermediate term sentiment, and primary term sentiment. We really didn't even talk about primary term in this video. So intermediate term, I would have to say the benefit of the Dow still goes to buyers on the Dow Jones Industrial Average, but in the minor term, the bears are winning with spinning top printed, which is a wild card. If we see a move to the upside next couple of days or so, I think there's a good chance we'll get to 17,900. If we break above that level, then 18,099, and then we'll go from there. Have a great night. I'll talk to you guys next